The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, once more into the breach, dear friends. And as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, man, we got a market that's down about, 5 points in the S&P cash? Is that about right? Let's call it 6 points on the S&P cash, 1.64 billion shares. So we went down, and it's going to be lighter volume. We're off about let's call it 140 million shares on the NYSE. Consolidated tape from yesterday at this time, although, it's 6 of one, a half a dozen of the other. You can kind of make it look at this both ways, but you don't like to either see just a total lack of enthusiasm at highs, which is kind of what we have now. Everybody wants to buy everything. No one wants to buy the breakout, and that's kind of where we're at. Very light volume, and many stocks blowing up, and some going up higher. But normally in a bullish market, you don't see a lot of stocks that are off 30-40%. We've had a lot of those lately, and, up 10%, probably not beyond the scope of reason, or 5% on earnings. But, any news that sees a stock down 30 or 40% pretty much means that stock was priced for perfection. And we'll take a look at a few more things out here. But no volume at highs, never a good sign. Some people can make cases that you're at highs and you're just hanging around them, and eventually you break out. That's a kind of a Tim Ord thing from years ago. But that only works when you have some at least appropriate volume. And right now we have no volume or light volume. We're coming in pretty much every day, somewhere between 1.8 and let's call it 2.2 billion shares light on the day to basically talk about even having a validated breakout. Now, can we still break out? You always can. But right now, we've got a Fed that is in hold mode, says that they want to raise, can't. Everybody knows that they're basically got a bunch of pants that happen to be on fire for some reason. And then, of course, we've got the rest of the government, which is the Treasury, that all it has is a giant B-52 of cash. It drops on the market anytime the market looks a little weak. It drops that cash in the Forex. The dollar goes down a little bit, and then the market goes up a little bit. And they've been using this to basically jigger the market. It is the last control that the government has on the stock market. We're up, 38 cents today. But my guess is they're going to get down there to that $38.80 on the dollar index. And we're going to start seeing some currency wars go on. And that will not be a happy time for anyone. As we get down here, you normally see these little bounces off these levels. But I can't imagine that either Russia or China or Japan or all the euro is going to be too much happier with the folks in Washington, D.C., deluging like a storm in Baton Rouge dollars on the market to try to keep and prop up our current market. Any kind of real strength into the dollar, which I think we will probably have this fall, would put a hurting on the market. Let's put it that way. And two, I have no even slight desire to buy a S&P that is rolling around anywhere from 23 to 25 forward earnings on the EPS. 18 is about as high as I go to be a real buyer. You guys can buy at the highs, and maybe it goes a little higher. But for me, that is trying to pick up pennies and nickels, and maybe even the occasional odd quarter in front of a steamroller. All you got to do is trip once, and you don't know when that once is going to be. And so I have to either be short or go to the sidelines right now. But no volume at highs, always problematic. What would be the most bullish thing this market could do? Come back to 2120 or so. Do so on very light volume and set itself up for a run into the fall. But I have a feeling that this market, or at least the people that control the markets, the Fed and others, have a kind of an idea that this is, you remember the movie 300? Everybody saw it. But the whole tenet of the movie was that if you could get the god king of Persia to bleed, they would know that he wasn't a god, that he was a mere mortal, and then therefore they would not think that he was invincible. Many people thought so. At least that was the movie's interpretation. So once he nicked him and cut him and he bled, they knew that he was not a god. I have a feeling that this market, especially the people around the Fed and everybody else, are scared to absolute death that this market would start pulling back, and it would be a domino effect of just lower prices that they could not control. Because, of course, what have they done? They've done everything, including yell fire in a crowded theater, to get people to believe that the markets are going higher and therefore everything is okay, when there are still structural issues, mostly caused by Congress, that need to be solved. Anyway, still not ticking 1.9 billion shares on the NYSE. If it's as light as the volume was yesterday for the last hour and a half, a lot of problematic stuff going on. In the meantime, we always have to revisit history, because if we don't know our history, we're doomed to repeat it.
Then it's all just a little bit of history repeating.
What else do we have going on in here? On 2004, on this day, the most eagerly anticipated initial public offering in years, Google stock begins trading after refusing to let Wall Street underwriters pull their usual stunt of charging fat fees for prices to mark the stock up. Google conducts a rare Dutch auction, and I don't know of one since then, although this is tremendously successful, to compete to create a price which all shares can be sold. Initially, the price is out at $85. The stock opens for trading at $100 a share and closes at $100.33. Most of the investment bankers jeer, and the IPO is a wild success for long-term investors. I would love to see more of this, not less of it. And this is the stock that Wall Street loves to hate, because they proved that they were not necessary if you actually had a good company making money and everything pretty much was in it. I was a very big skeptic, because that $100 was a fairly decent price for that stock at the time. But they grew into it, just like these pants I have that are a little big in the crotch. Just hope to grow into them one day. Be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. First question from the den is Danny in Atlanta. First, Majestic Silver. You don't like the volume out here today on a Friday with fairly light volume. It's down 5.2 million shares going into 5.5 million shares. If you look at the energy coming off on the leg up that started July 25th up to August 10th and then back down, the energy is already significantly more, maybe 18% more on the way back down. So at best, you can hope for a consolidation, but this looks kind of like for the first time where you actually had some decent energy pullback on this move back up. So to me, this thing looks like that $14.48 low can get tested. You might even get down to this gap at $13, maybe even to that $12. And I think that sets up a larger trading range in some of these silver companies. What was the other one? I had it in my newsletter this morning that had me give some pause. It's not AK, not AKS. What was it? A something. AKG. Which this is, what is it? It's, come on. There we go. This one is probably the most interesting to me. It's for this sector out here. This one probably the lightest volume at highs. I don't know a great deal about this stock, but I see a few more of these out here. Very light energy back up into the highs. I've heard Tom talk about a pullback for a while. We kind of just treaded water out here in this 1350 area. kind of for a while. And, can you bounce up a little bit or down? Yeah, but it certainly looks like a market that is extremely tired. What I dislike also about all these in the commodities channel is I wanted, in fact, I asked Steve Rhodes to take a look at it before, and that is United States Steel. Some of these other ones, we'll look at FCX next, but I just wanted to see these commodities actually show me that this had been at bottom and why the volume isn't incredibly expansive. I don't see a lot that says that this has actually found a bottom. This thing probably shouldn't have gone any lower on United States Steel. When we look at FCX, I kind of see, this thing in a big asymmetrical triangle headed back down. And, of course, the first breakout on this one's probably going to be a false break for this one. So fade the move after a couple of 2 or 3 days after this thing breaks one way or the other. My guess is this thing will probably break up a little bit and then head back down. All the commodities look a little weaker. The numbers that I've spent this morning looking at from China continue to show weaker demand for a lot of things, where everybody keeps on telling me everything's going up. Every time I find some kind of new data point, we talked about the movies sector being down 20% year over year in China. Just a lot of things that make me think that there's stress in the system. Plus, you've always had that housing bubble out there that they've been able to paper over year. And I'm just wondering when that comes due. We're also coming out on the anniversary, was the 24th of August, I think, last year, when everything fell apart in China. And we're getting kind of close to the due date for when those stocks were only supposed to, you had to hold the stocks for 6 months if you own more than 5% in any company. My question is, what's going to happen now that that year's up? First, it was 6 months, and they extended to a year. They're going to extend it to 2 years now. Is that going to be, are they just going to let it go, and that's going to cause the kind of a black hole to suck everything down with it? Very tough to see how any of this stuff works out. You've got an asymmetrical triangle, so I'm pretty good about not trying to predict which way this thing breaks, but wait and react instead of anticipate on it, because these things tend to be kind of a coin flip as far as I've been able to go after them in the past. So best wait. But a lot of these commodities out here look like they should have had a lot more strength in the last few days and have not as we've pulled back. 2181 on the S&P cash. We're off 5.5 points. Still do not have 2 billion shares as we get into the bottom of the hour. Goldman Sachs had a big list of stocks that are highly shorted by the hedge funds. And I wanted to go through that list today while we had some time and the market was kind of quiet going into a weekend with no volume yet again. Some of these are at fairly decent highs, but they do not have the volume. ABBVIE. ABBV is the symbol on it. This one broke above, did so without the kind of volume and sign of strength and continuation you'd like to see. Spiked on the 17th, pulled back down into lower out here. Probably not a stock that I'm going to pull the trigger on, but hedge funds, a lot of these guys are short that particular stock. Abbott Labs, this one tried to stay up for a while. Has a little doji out here today. What I really dislike about this one and the biotechs in general is this last leg up and how weak it was from the June 27th low to the August 2nd high. About 20% off seems to be pretty generally what the biotechs are off. This has not been a strong leg for them. Let's look at the IBB real quick. I still, one too many bees. A bee in my bonnet. Okay. This one continues to be under that 3x3 displaced moving average. As long as it stays below that, you continue to have issues. I said that yesterday I thought it might take till Wednesday for this to crack, but it's still, as long as you stay under that 3x3, you still have a very valid sell signal on the IBB. Other stocks that are massively shorted by hedge funds, looking like maybe they're at the point now where they might find some weaker prices next week, is the Boeing company, this thing hovering around 135. You got kind of what you're looking for. This one's a more messier pattern than normally I look for, but any close underneath a 3-day moving, a 3x3 displaced moving average or a 9-day now would have me incredibly worried about Boeing. Traditional moving average. Kind of the same thing with the 9-day. It's not going to be that much different. It's going to be pretty close. But you are at the point now where a lot of these things have to actually move now and or get off of the pot. Caterpillar up a little bit today on John Deere's bank shot. We'll talk more about that and John Deere when we return.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we're at the bottom of the hour. Still don't have 2 billion shares on the New York consolidated tape. So volume sucketh. That's a new technical term out here. Anyway, we're talking about Caterpillar. What else do we have out here? And Deere. This is underneath. It kind of popped under its 3x3 the last couple of days. Didn't stay above it earlier in the day, so you want to watch this one. But I had a question about why I'm thinking that we've got maybe 1 or 2 or 3 days. I just kind of hovering around here. There's a great deal of stocks that are kind of like this. They've brought underneath their level. They're not really breaking the last couple of days, haven't been able to break back above these very short-term moving averages. And kind of think that we've got something going on in that. If they break, I will change my mind. But right now, kind of weak. Now, of course, great bunch of people that were short John Deere had a little bit better earnings, was up 10% earlier today. Lots of volume. But I think if I was looking at Cat and Deere last night, I'd probably lean on Deere more than I would Cat. It certainly looks like the food business is going to be much more important than the dump truck business in the near future. Like I said, a few of these things are starting to fall underneath this 3x3 here. So you want to watch these over the next couple of days. I think this turn is going to be very slow over about 3 more days. Yeah, sucketh. So you're going to want to watch these. I think they're going to be kind of like 1, 2, 3 days, and then you're going to see the drop come in, maybe a gap down in the markets or something. If these things reverse and go back up, I'll look at it, but I don't see any volume. One of my tenets in trading is that markets go up until shorts quit shorting. And why the hedge funds and some of the billionaires are shorting, the vast majority of other people are not. In fact, we've got a 4-year high right now in the bullish sentiment. That was, what was it? Investor sentiment, investors intelligence. Investors Intelligence, I think, is the report that comes out every couple of weeks on what people think. They also poll newsletter writers. But pretty much right now, you've got 60% of people bullish, about 20% bearish, and about 20% undecided in that. And that's fairly high ratio. Normally, it's 30, 50, something like that is pretty normal. When I look at the data that I have, there's the usual suspects, maybe 10 or 15 stocks that everybody shorts every single day, and they continue not to go down. But the rest not getting a lot of love when it comes to the short side. I've got kind of even an index I've made to figure out how many the NQ and how many of the SPY stocks and at what percentage they're being shorted every day. And, we've had a couple of days where some shorts kind of came in, but it was fairly minor. I saw the day we had a huge signal. What was it, a week ago on Monday? Yeah, it's almost been 8 days now, 9 days, where those hedge funds did come in, and a lot of the billionaires did pull the trigger, and they're not in a bad position here. In a lot of those stocks, they were just, and in the SPYs, they were basically buying about 7, 8 days ago, and the market's pretty much exactly where they were when they shorted it. So I don't think they're feeling a lot of pain just yet, but we will continue on. Of course, I got an email here about my comments on Tesla last week. Last Wednesday, I said Tesla was one of the more interesting stocks just because this thing looked like it was pinned at $225. And I said what I would be doing is selling a spread at that 225 level. And man, there's not a lot of money in selling spreads. There's okay money, but this was one of the stocks that looked like there wasn't anything going on, that they weren't going to be able to move this thing out and around $225 for a close on Friday. it's very rare not to see, or very rare to see options market makers so convinced of the price 7 or 8 days before expiration. So I went out, not this expiration, options for this expiration, but options out into September for the 225 spread. And I cleaned those out when it was up in about 224 earlier this morning. And that's about it. But not a lot of positions to be had right now. And I didn't see anything that made me think that there were a lot of white lightning trades to go out on today either. So pretty quiet day. I'm still remain rather bearish, but as long as I can hold these positions and they're within about 1% of where I got in to them, I'm not going to be vastly worried about it. Maybe I stop out, maybe I don't. But again, my thought are a lot of these stocks are under these moving averages, and come Monday, Tuesday, Wednesday, we're probably going to see a little bit of a pullback, and then we could see the bigger ones. Other stocks that are being shorted heavily by hedge funds now is General Electric. You know, I don't know, they kind of probably late to the party now. This thing's done nothing but go sideways after some pretty horrifically bad earnings and guiding down for the future. It's done nothing but go sideways out here. I don't know if you can make a great deal about that. Gorilla Glass has been going up. This one's been in a trading range forever. I'm always watching this thing for either a breakdown or a break up. I thought it was going much lower for a while. They have come out, and in fact, the new phone that they have with Gorilla Glass 5 is out today, the Samsung Note 7. And I actually went by and took a look at it at lunch today. The reviews were absolutely fantastic. A head and shoulders kind of review above anything that exists, including the iPhone. Corning has, this I think is the first phone that they have the Gorilla Glass 5 on. These are all minutely better versions of Gorilla Glass 1. What they do is they boil sodium till it turns into a vapor, and then shoot it at 1,000 miles an hour at the glass, and put those sodium atoms in between the rest of the glass substrate. And by doing that, kind of like putting stuff in between pool balls, and really firms up the glass. They continue to do it a variety of different ways. I think this thing has kind of been moving up on that. It may be a sell the news thing, but still a lot of people short this one. We'll get into the rest of the short list from Goldman Sachs. Take a look and see how some of these do. What else can you say? We'll look at Apple when we come back to it.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we said we'd take a quick look at Apple. Apple had kind of made a nice Gartley pattern out here. Not quite closing under the 3x3, but pretty close. I'm not expecting this thing's going to roll over that quickly, but I think there's probably better than not chance that this drifts back down into that $100 level. This Samsung phone is head and shoulders above what's available. And last I checked, it was going to be somewhere in the first quarter before we see anything out of Apple. So I don't know. Can they handle 3 more months of being a phone that is probably a year and a half, 2 years old for technology? Because there's a lot of new stuff in this phone. We'll probably do a bigger review in the near future. But Apple seems to be behind the 8 ball at the moment. IBM is another stock that a lot of people are short. We were long this thing back when in June 27th in the Tech Insider. I like the story on it. I'm going to have to wait for a very decent pullback on it. But this one has already kind of ticked back down. We said last week that I think this could get down to that 154 level where you've got a double gap. The first gap coming off the June 24th gap down, and then you had a gap up on July the 8th. And that you got 2 gaps like that are almost the same. A pretty good indication that's where it's pointing, that it wants to come back at that 154 level. So you'd have to take a look at it there. The downside to be shorting this stock is, of course, you're going up against Mr. Buffett. And I think that there's easier trails to blaze than going after that. Intel, it seems like it has a lot of good news. All it's done is gone sideways now for about, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Well, let's call it 20 days. And this gone sideways. This really, at highs, makes you have to wonder if there is not some giant distribution in Intel. Most of the news is pretty good for Intel, but it is, I see a pattern of a market going this sideways in one of the big stocks on the market at highs. Always has me thinking of distribution. J&J, this one's already rolled. You know, you got pretty much everything you wanted here on the, what is that, the 3rd of August. That this thing was headed for lower prices. Got underneath the 3x3 displaced moving average. like a lot of these stocks, this may not be the most beautiful 3x3 repo patterns into light volume in the summer, but not a whole lot. LMT, this one, of course, is exactly what you look for, which is 10 to 15 days above. You get a few days below, you get it back above, and the next time that it goes underneath the 3x3 displaced moving average, it is a time to short. The only thing is, I don't think that there's this much to the downside on the stock. It also had a high volume high, so I don't like that part of it either. They also have 3 new businesses they're involved in. Any one of them could be as large as the defense business that they do already. I like to kind of know companies that really don't have a road ahead of them. This one, you can't bet on it, but I certainly think that there's probably easier ways to find cash out there and be short other than Lockheed. And certainly that high volume high out here, what was it? He had 13 million shares on the 12th. Looks like it's going to get tested. So you can't go long for $10 on a $250 stock. At least I can't. And I don't like being short this one with all the stuff they're involved in. If you thought the military stocks were going lower, defense stocks were going lower, I think maybe some of the other stocks that don't have a lot to do with other businesses, and all these businesses could be huge, would be it. Netflix, this one would be a very interesting short. Unfortunately, it's perpetually 30% of the open float is always short. So I just have to say, yes, is this a short? Yes. Is it probably going down? And no, I can't short it because guess what? Anybody can come out with some big news on it and blow you out of the stock. If you're a big hedge fund and decide that you want to short this thing for the next 2 years, that's one thing. As a trader, how long are you going to sit on a losing position? For me, not very long at all. NVIDIA, this thing also just starting to tick underneath some of these highs. You're underneath the 3x3 today. You're doing it with light volume. I'm not saying that there's a signal on this one yet, but if it would go back above the 3x3 and close below it, I would close that position out if I was long. So it's getting very, very close to a sell signal on that one. AT&T already had the same sell signal. I couldn't have shorted it. There's not enough money in it. But certainly this one has come down and come down with significant volume on the last 3 or 4 days. So I don't know what else you can say. It's already blown through that July 8th low. Did so with 3 million more shares on the 16th. So I don't know what else you can say about that one. Headed back to probably the high 39s is most likely position. Target, of course, came out guided down. I don't know if you can make a great deal out of it other than an earnings flop. Walmart looks to be getting some of their business back from Target, and from going to Target, I can tell you that there is a big difference in price between Walmart and Target. When you get cost conscious, Target may be a good signal that the people on the lower end of the social economic spectrum may be finding a little bit out there that they're trying to get their dollar to go just a little bit farther and maybe wandering off to Walmart. Doesn't look like this business between Walmart and Target is shrinking or growing any. Just the mix between Target and Walmart when you look through the data and the earnings of the last couple of days. Walmart, of course, did gap up on earnings, pulled back kind of out here today. I'm not a fan of retail in any stretch of the imagination. We had a lot of bounces. Most of those bounces were because the stocks were far too heavily shorted. Walmart lasted all of a day to come back and fill this gap. That can tell you something also. I don't know what else is out there. I think Walmart's probably coming back to about $66 over the next, maybe between now and Christmas or something. This one's probably not going to move that quickly, I don't think. And the last on the Goldman Sachs list, probably when we come back from the break, is ExxonMobil. This one's already kind of come down. I wonder about how many people are shorting it now. You would want this thing to be about 90, almost 90. 89.75 is where I'd love to see this thing be. If you were thinking crude and energy was headed lower, one more pop on this thing might be what you're looking for to pull the trigger if you are thinking to the downside on it. We'll be back after this break.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we go into the weekend, we're off 4 points in the S&P cash volume, just 2.1 billion shares. Probably the most bearish thing, a lot of people would be freaked out about it, is if we go positive on today, make yet another high on even a lighter volume. A lot of people would be kind of a little jumpy going into a weekend with no volume. But what you need is volume to the upside. What we just don't have is volume to the downside yet. But like I said, Monday, Tuesday, Wednesday, going to be probably the most important days between now and the first week in September for setting the tone. Earnings are pretty much done. Not going to be a lot of jobs numbers, not going to be a lot of anything else. That's going to be it. Anyway, Hormel earnings and an upgrade out here. Of course, Hormel, the maker of Spam.
It ain't spam.
Oh, wonderful Spam. I grew up with Spam. Spam was everywhere in Hawaii. Now, what do you have out here? You've got a big gap. I mean, a big slam down in 2 days, back in May 17th and 18th. 12.7 million shares. First day is 5.4 million shares. Got 3.1 million shares. So we're kind of coming back up to the supply line. Still a good day, but you didn't get the volume that you had August 1st. Again, these are we're getting some very half-hearted rallies back higher. This is one of them. I kind of like the food business, but this one is probably one that looks like it's in a lower trading range. And I think the difference is between producers and suppliers out here. When I look at mostly suppliers that may have higher food rates coming at them, like Hormel, they just seem to be a little weaker. I'm not going to ever play Hormel as a stock in my newsletters or actually even myself, but it is kind of a little tough. Duffy in the Den brings up McDonald's. The one good thing about this one is that it is making a fairly decent signal. Thanks, Duffy, for bringing this one back up. I was thinking about this one earlier. You got two previous lows down in this level, and you have pierced the March 3rd low of this year that had 10 million shares. You've pierced the June 27th low that had 14 million shares, and you've done that all with 4.2 million shares so far. Let's go back a little bit farther and see if there's anything else out here. Well, you got 112.71 that you could get to, and you would probably like to see that level. You also have the possibility of coming back and filling this gap that runs from 103 to 109. But I don't know if you're going to get that. The energy about the same, and same up, same down. I would want to see the 112.71 tested. You got 11 million shares in that too. So, just a little bit more. You'd have to see. But if volume all falls out here, if the market does turn south, traditionally McDonald's is one of the first things everybody buys as a safety stock. Well, anyway, we're going to go to the weekend now. Everybody's going to get a nice little rest. Mr. Market is trying to huff and puff its way back up to its high, again, on no volume, just 2.119 billion shares out here. Hang on for Tom O'Brien as he wraps up the last hour of trading in this week. We're in the dog days of summer, but I think those dogs are going to start howling the first couple of days of next week. So stay tuned. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.